Welcome to the True Wealth Podcast, where we specialize in helping aspiring homeowners break into the real estate market and help investors create and build wealth through real estate. We will be sharing some of our best advice around real estate so you can purchase your first home or grow your real estate portfolio, increase profitability, reduce taxes, and achieve financial freedom. Your host, Sean Adeyemi, is a certified financial planner, mortgage professional, and fellow investor. We want to help you get real so you can pursue your investing dreams with confidence. A real estate acquisition lifestyle is within your grasp. Financial freedom is possible when you have the right mindset, coaching, advice, and community. So, let's get real.
Welcome to the True Wealth Podcast. I am your host, Sean Adeyemi. Thank you very much for joining us today. I've got a really important guest for us today here. Kumsa Hassan is one of my favorite buddies. We've been working together for a few years. He is an insurance expert. And we were talking, maybe about a few days ago, and just talking about some of the files we have in place. And we thought, why not make this a podcast and talk about misconceptions people have about home insurance. Most times people are simply just shopping for the best rate on their home insurance. And there are things that they need to be mindful of to make sure they have the right type of insurance for their property. And so Kumsa is going to shed a lot more light on home insurance for us today. But before we get into that, Kumsa, can you tell our audience a little bit about yourself? Welcome and thank you for joining us.
Well, thank you for having me, Sean. I appreciate it. I've always been a pleasure working with you in the past. Pleasure to be on the podcast as well. So thank you. And yeah, well, you know a little bit about me. I mean, I've been in the insurance industry for 7 years. I've been dealing with the home and auto and commercial side. So I've seen a lot of deals go down on the home insurance side, especially on different aspects of different purchases, right? Just like you mentioned in the intro. So yeah, I'm here to help out any way I can. If I can answer any questions or give any examples for the listeners, I'd love to do so.
Right. So let's get into it. So when it comes to home insurance, the average person is just looking at the only reason why people probably get home insurance in the first place is because their lender requires them to do it, right? When they're closing that mortgage, they want to see proof of insurance. But beyond just shopping for the rate or trying to get coverage, what are things that, or how should a consumer approach getting the right insurance for their property?
90% of the people I get a call from are people that require the insurance either today or next week or a couple of days from now, right? So, and then because the lenders are requesting it. So, a couple of things to look out for when you're shopping, though, does cheaper is not always better. All right. I mean, especially in insurance, you want to look at the coverages, and there's a couple key coverages you want to take a look at. You want to look at your replacement costs on the building to make sure your valuation is done accurately. And you're not just getting a lower building value that you're being insured for just to save some money on the price. You want to look at your deductible, which is how much the insurance company is going to expect the client to pay for first. And then you're also, most importantly, in my eyes, what I've seen day in and day out is water coverage, right? You want to make sure you have sewer backup or overland water coverage. That's going to protect you in the event of any water claims that happen in your home, and it helps out in those claim scenarios. Because what you're citing on the application, that home insurance application, is what the claims adjuster and the company is going to look at during a claim, right? That's what they're taking. So
right. So let's look at first, when you're buying a home, the first question is, what's the purpose for that home? Are you buying it as a primary residence? Are you buying it as a rental property? So if you're buying it as a home, as a primary residence, you want to consider what's your deductible. If there was ever a claim, fire, flood, whatever that is, the deductible is the amount that the insurer will require you to pay first before they cover any damages. And so typically when buyers are looking at insurance, they may not be looking at, okay, deductible, how much can I afford to pay out of pocket? And I know sometimes insurance brokers would give you a really good rate, but you have a high deductible of what's the average deductible you're seeing that buyers are getting on their policies?
The average deductible that I like to offer is $1,000, right? And that's like a middle number. You can go as low as 500 with some companies, and you can go as high as 10,000, 5,000. It depends. In my eyes, I like the $1,000 range because it's not too low, it's not too high, and it gives you that medium. In the event of a claim, when a claim happens, you're going to be you're going to be faced with that decision. Do I put this claim in? Do I not? Do I just not invite the bullet and pay it myself? I look at the threshold. My threshold is usually not $3,500. The claim is under $3,500. You're better off paying it out of pocket. If the claim is over, I would consider putting in a claim, depending on if you've had claims history in the past, right? So a couple variables, but the deductible I like to flow with is $1,000.
So if the claim is what's the threshold? How do you arrive at the $3,500? If the claim is less than $3,500?
Yeah, it's a little bit of a calculation from what I've seen. In the event of a claim, typically your home insurance rates may go up, right?
Okay.
Company, and then you don't want to put in a claim for $2,500 when your deductible is $1,000. The insurance company is going to be paying $1,500, and then over 5 years, where your claim is being rated for, you're going to see an increase that's bigger than that $300 a year, and then you're paying more than you would have long term versus short term. That's where I come up with that number.
Okay, so if the claim is a small claim, even though it kind of hurts, it's better to bite the bullet if you can and pay it, rather than putting through insurance and possibly see insurance rates go up, and you're paying more than the $3,500 you would have paid if you had just fixed it, right? That's kind of how you're looking at it, right?
Yeah. So I would definitely take that into consideration. That's what I always recommend. I mean, in the event that you can't afford to bite that bullet, obviously that's what insurance is there for. It's just more of that long-term approach. And a lot of these companies will give you, the longer you have experience without claims, the more discounts you may be eligible for. Obviously, claims do happen, and we have a number of companies dealing with brokers. Always we have a brokerage, so deal with a number of companies that we're able to place people with, and some of them will even allow the first claim and not even rate you that much for it, right? So always consider a broker with multiple options, because in that scenario of a claim, you want options. You don't want to get stuck in your at your renewal time.
So that's generally when you're looking at general all insurance, whether that's for your primary home, for your rental property. Sometimes I find that people are not exactly honest on their insurance application. Can you talk about that and how that impacts what you tell the insurance company, and what key things to be aware of when you're either applying for home insurance or even the home insurance application? When it comes to making claims, why do you see sometimes claims getting rejected?
So what I've seen in my experience with claims being rejected are just people not being truthful on their applications. They think, if I don't mention there's a tenant in the basement, then everything, it's fine. The insurance company, it's okay. If I don't mention my claim history in the past, it's okay. If I don't, there's a number of things, right? So let's say I've seen people say, hey, I bought this house, I'm going to be living there with my family. And then they'll rent it out and not alert the insurance company. Now, they think it's something minor because the family is living in there. However, the application states it's a primary residence for the client. So with that stuff, I've seen claims be denied only because they're not being truthful to the insurance company. And something as small as that on an application can result in a denial of a claim.
And sometimes it may not even be a case of not being truthful. Sometimes it may just be, it just didn't cross your mind. Maybe you purchased a home to live in it, and then at some point you decided to make it a rental. What you're saying is that if that house becomes a rental at some point, then you need to notify the insurance company, because they would need to be aware in case there's ever any claim, there is full disclosure, by the way, this has become a rental property. Now, when that happens, does the insurance policy typically change? Do the premiums change? Are there Is there new documents they need to sign?
Absolutely. So there is a little bit of a change sometimes depending on the company. Some companies will allow you to just switch the policy over to a rental property. Sometimes they won't. Sometimes they're going to say, hey, we're going to give you 30 days to find a new insurance company or whatever the case may be, right? So, and that's the biggest reason why it's important to let the insurance company know. Now, again, obviously, if time passes, I've seen claims get accepted when it's a honest mistake, like you just mentioned, that scenario where, hey, I forgot to tell the insurance company because 6 months in, I realized it doesn't make sense for me to live here with my family. We could live with our parents and rent this property out, right? So,
right.
It's all about the intent behind it, and it gets difficult when somebody owns 3 or 4 rental properties, and they're saying they have two homes, and this one's for the kids, and this one's somewhat of a cottage, but everything is being rented out. That's where the red flags up here.
Do you see a difference in premiums if the home is a primary residence versus a rental or vacation property?
Typically, yes. There's times where you won't see the premium difference, but on average, I would say yes. There is a premium difference. There is a little bit of a higher rent exposure. That's how the insurance companies look at it, and the exposure comes from the rental factor, right? Where you're not living in there yourself. It's not your homeowner policy anymore. It's a rented dwelling. And the tenants may not, or they may take care of the property better, or if not the same as how the homeowners live in it, right? So.
Talk about the underwriting, because I think that's not something that is discussed often enough on how underwriting works with home insurance.
Each company has their own manuals, their own underwriting guidelines that they abide to, kind of like their Bibles. And they will make from time to time exceptions on what they'll accept as insurance policies, but those underwriting guidelines are there. So brokers and agents can refer to it and write within what their appetite of risk is. Now, it's very important, like we mentioned with the home application, that everything is truthful, because if it's not truthful or it doesn't match up with what they hold to their standards in their underwriting guidelines, the red flags get raised, and that's when they start going. The claims process may not go as smoothly. For example, there's a number of different things, but so the underwriting that we're looking for typically is for roofs. We want to make sure that your roof has been updated in the last 15 years, right? Because wear and tear is not covered on insurance. So some people will have a roof for 20 years and a couple shingles fall off and they have a leak and they say, well, I need a new roof. Well, as a homeowner, replacing your roof is responsibility, right? So, and if you had your roof for 20 years, it did its job for 20 years. Now it's time for an upgrade, right? So also some underwriting, you can buy an older home. I had somebody buy an older home before. In the chimney, it was literally detaching itself from the house slowly. And they came to the insurance company, but the thing is, like, they denied the inspection when they purchased the home, and wear and tear, like I said, is not covered under insurance policies, right? So these are things that homeowners have to upkeep and fix and etc. But there's a limit to the underwriting, and then they also, in the underwriting, they have their terminologies too, right? So it's good to have a transparent broker on your side to explain these things always.
So wear and tear is not covered, and I don't think that's something people are aware of. Is you, just like you said, you damage a roof, or let's even say not your basement, but let's say your porch is the railing on your porch is falling off, and somebody gets injured there. They're going to, and you want to make a claim, they're going to go back and see, okay, how long has that been a problem? When has that been fixed? And you may find out that may not be covered because it's wear and tear, right?
And when I'm on the phone with these underwriters, sometimes they're asking questions, right? And nowadays, because technology is so advanced, or what's the address? And they'll look it up, and they'll look at the house on Google Maps, and they'll say, hey, like you said, the railing on the front porch isn't on both sides. It's unsafe, and we need that done before we can buy the policy. Or, hey, pick up the trash in front of this house because there's a whole bunch of trash on the side and debris and etc. Right? So they're on top of this stuff nowadays, and it's for the better too, right? So claims don't get denied, and it's different because in other industries, right, like on your side, they do the underwriting up front, and a lot of times on our side, we will do the application ourselves, which is part of the underwriting process, and we submit it. Policy documents are usually produced electronically, and it's done. Now, depending on certain thresholds, they may go further with the underwriting. If the house is a certain value, for example, or something feels off to them. However, on your side, they do the underwriting up front, so there's no issue. The claim happens, it gets paid out, right? This is where murky waters start to trail in because somebody thinks that they're smarter than the insurance company, whether that's the agent or the client, and they think, if I tell them it's 2,000 square feet instead of 2,600 square feet, we're okay, right? So, and then the claim happens, and they say, hey, how come you're not building the extra 600 square feet? Right.
And so simple things like that could cause an insurance claim to be denied because they were not accurate on the application.
Even reduced. But yeah, exactly. The smallest things like that.
Right. So if there's one key takeaway is give the insurance company as much information on the specific property you're insuring, whether that's going to be a primary home or rental. And if things change in between, let the insurance company know. Wear and tear is not covered. Share some life stories with us of examples of that you've seen in being in the industry for this long in terms of what happens. What are issues that homeowners need to be aware of? That
I'll give you a real life example on my side. A couple of years back, I had a rental property and it was being rented out to some tenants. There was a water claim that didn't go through as a water claim at all, or even a claim in general. The people left their shower running due to negligence, and then it caused it to overflow and seep down to the kitchen. So I talked to a couple contractors and people who had connections with the claims in the insurance industry, and they said you have a high chance that the claim's actually going to get denied because it's due to the negligence of the tenants. They're no longer our tenants, but it was a interesting scenario that one of those things where we have to pay out of pocket to fix. And
that was it was indicated that it was a rental property.
Yep.
Okay. So even negligence can be a reason for claims to be denied.
Absolutely. Right. So I have a feeling if we put the claim through, it would have been at the end of the day paid, but also the limit was like $3,000 in damage too. So with the deductible being $1,000, also that played a factor in it. But they said, even if you do put it in, there's a chance it could get denied, right? So,
right. What's a landlord to do when you rent out your home and you hope that your tenants take care of it? You declare that it's a rental insurance property, and you hope that the insurance company would cover the difference if there's damages to your property. How does one navigate? So, like, what's the point of the insurance? Yes, there is a point, like big damages, fire or whatnot.
One thing I would always recommend now as a landlord is to confirm with the tenants that they have insurance. Also request to be on the insurance as an additional named insured. That way, if the policy cancels for any reason, you'll also get notice that the policy has been canceled. I've seen instances where tenants will buy the insurance because the landlord asks for it, and then they'll cancel it in 2 months or whatever the case. Right? So this way you get notice as well. You can't can't legally request it and make it mandatory. However, it could be a conversation in the beginning of your lease agreement, right? So to maintain the tenant insurance, that way they have liability insurance, and God forbid anything happens, that if you sue, there's they have access to the insurance.
They have access to it. So as a landlord, there's your own separate insurance policy that you should have. But in addition to that, getting your tenants to have their own policy and possibly putting you on that policy so you are aware that the policy isn't just a one-time thing, but it's active. And even when it gets canceled, you get, like, just like I said, I don't know if you can really enforce that, but at least having that conversation at the beginning so that there's protection on both sides of it. So even if there is a damage as a result of the negligence of the tenant, the insurance companies can confer on whose policy is going to pay for the damages, the tenant's policy or the landlord's policy.
Correct, right? So, and then there's the liability exposure where you'll be able to, you don't have to, hopefully you don't ever get there, but if you were to sue, that's there as well.
Right.
And
okay.
So other things I just want to sprinkle in, if you don't mind, too, for landlords.
Go ahead, go for it.
Yeah, definitely add in rental income to your rental properties. That way, in the event of a claim, if your tenants no longer live there for the time being of the repairs, the insurance company will supplement the rental income. That way, you can pay the mortgage and not lose out on your income. And then, if you can,
actually, before you note the other things you want to talk about, because I want to quickly go on that topic. So if you know the rental income on the property, if there's ever a situation where your tenants have to move out and you have to fix the place, how does the insurance company decide? Like, how do they verify? I can tell the insurance company I'm earning $2,000 a month from that place, but I'm only earning $1,800, right? How does it work when it comes to claim time if you ever needed to make that claim on the rental income?
Absolutely, that's a great question. I always say just be always honest, obviously, right? There's people that are going to try to take advantage of the system. And these guys know. This is multi-million-dollar companies. They know. They can do a quick search in the area. They could see what it was posted for on the internet. It goes everything, right? And the last thing you want to do is be untruthful during a claims process, because they're paying, right? They're paying. Don't try to squeeze them, because they don't have to pay technically if they find out you're lying, right? So, but the rental income only occurs if the covered claim is in the process of being worked on. So,
right. So I'm assuming they'll want to see lease agreements. They'll want to see proof of the rental income being received from that place. I mean, we're not encouraging any listeners to be dishonest, but we do realize that these things happen in the marketplace, and it's better to be honest than to try and game the system. And
it'll bite. It's better in the long run. Even the relationship with the insurance companies, right? Because at the end of the day, they're hoping to have a great claims experience for you, right? So obviously, any claim is going to put somebody out a couple dollars, maybe even some time that they didn't plan for, because it's unexpected 99% of the time. So definitely be truthful, just like you said.
Now, when it comes to claims, and I shed some light on this for us, if a client has had multiple claims in the past, or there's been issues, do insurance companies talk? Like, is there a database where an insurance someone may be deemed a higher risk because of maybe they've had other claims with other insurance companies in the past?
So we have portals that allow us to see on the home insurance and on the car insurance side, where also they do use sometimes the same contractors because they're preferred vendors. And I feel like in the industry, I've been here long enough to know people talk. So yeah, people talk, and they see things. There's notes left. I mean, on my side, on the broker side, on my broker's side as well, I always stress notes. So I leave so many people notes that if anything, we find a red flag, then, depending on what it is, or what we alert the company, and we want to maintain that relationship with the insurance company too, right? To let them know that we're trusted. There is a system, and there is portals on the back end to confirm sometimes how much, how little, what happened, what day, and descriptions, etc.
Got it.
There's people that are saying no claims in the last 5 years, and we pull the report and we see 2, right? So it's you don't want to leave a broker or agent, somebody that's in between you and the insurance company side, with a bad taste in their mouth, because then they don't want to defend you, and you need somebody to defend you when stuff goes wrong in insurance. So,
right. That makes absolute perfect sense. So, sorry, I didn't mean to cut you off. Can you go ahead with the other things you wanted to mention? I wanted to kind of address that just to make sure that it's clear.
One of the things I like to look for in rental properties as well, and only a limited amount of insurance companies will offer this, is guaranteed replacement costs. Because the value of your homes, I remember 2020 during COVID, to rebuild a home cost almost double of what it was a couple months before, because the shortage on lumber, shortage on the labor even, right? So just make sure your rental properties have guaranteed replacement costs if you can. Otherwise, make sure it's correctly, it's evaluated correctly. That way, in the event of a claim, there's no surprises, and just check it every year. If you don't check it, have your broker or agent check it. It's as simple as sending an email saying, hey, just want to confirm XYZ. At our office, we shop everybody 45 days before the renewal. That way we can just be on top of it, and there's no surprises for us or the client.
Make sure there's replacement costs and keep that up to date. You've had a policy for 10 years and the cost to replace that property has changed dramatically. You want to update that in case there's ever a fire and you need to make a claim. You're not making a claim on a property that cost $500,000 to replace now, but when you first got it was $300,000. So that's something important to know. Anything else you want to add?
I can go on for days. I feel like we're gonna pull out a part 2 and part 3 of our episodes, so I can go on for days.
Okay, so on that note, we're going to leave this here for now. We'll probably have Kumsa back on another episode to talk a little more about insurance and what you need to be aware of when you're shopping for home insurance. And even when you're looking for an insurance broker, you want an insurance broker that is honest, that gives you all the information. More information up front is always better than to be blindsided at the end of it. Kumsa, thank you very much for joining us. Before we let you go, can you tell our audience, if they wanted to reach out to you, what's your social media handles? How can they get a hold of you?
Absolutely. So everything is on my first and last name, really. So LinkedIn, it's Kumsa Hassan. That's KUMSSA HASSAN, which will probably be right here somewhere, and maybe in the description. And then also my email is Kumsa, my first name, @thebig.ca. I'm a managing partner of Billiard Insurance Group Aurora, and we have 9 brokers. We do home, auto, commercial, and anybody needs any help, or even if you're in the insurance industry, just want to chat, more than happy to have a discussion.
Thank you very much for joining us today, Kumsa. Really appreciate it.
Thank you.
This is all the time we have for today. Thanks for listening to the True Wealth Podcast. Don't forget to rate, share, and subscribe to the True Wealth Podcast on your favorite podcast platform. Follow us on Instagram, Twitter, or Facebook @True Wealth Pod. We'd love to hear from you. Share your thoughts, ideas, and questions with us on our social media platforms, or email us at podcast@truewealthadvisors.ca. And who knows, your question might be the subject of a future episode.